Hello and welcome to the weekly commodity market update. I'm Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing pretty well. We've had a shift in the weather once again because it is Missouri. So now things have gone from hot and sunny to really gray, cloudy, 50 degrees. That's kind of the tone.
I had to mow my grass, or I shouldn't say I had to. I mowed my grass Sunday in a pullover, in long sleeve pullover, because it was like 55 degrees in Columbia.
Well, it's amazing how quickly it can change. And, I guess that's the adage in Missouri. If you don't like the weather, just wait a week and it'll be something different. But talking about change and constant flexibility, can you give me a recap of what we saw from the markets this past week?
Yeah, and pretty much same mentality holds for the markets last week. You didn't like the price, just wait around and swing in your favor, because we saw some pretty drastic swings last week. Old crop corn for July ended up down 23 cents to $7.86. New crop December corn down 49 cents to $7.39. Old crop soybeans for July up 31 cents to $16.87. New crop soybeans in November down, up 6 cents to $15.18. And then looking at those soybean components, soybean oil down 2.5 cents per pound to 80.5 cents. And then soybean meal up almost $9 per short ton to $422.50. And then new crop July wheat, or new crop and old crop at this point, July wheat up to or down 57 cents to $11.90. So a pretty strong week of swings.
So obviously a lot of movement there. What highlights really dictated the market?
There was a couple of big ones, but we'll just kind of go in the order of the way they happened last week. U.S. ethanol production was flat at 991,000 barrels per day. That followed 3 weeks of growth. So kind of maybe some flattening out there, finding a new steady state. After a rough week in export sales the week before, this past week, we saw a surprise counter seasonal move in old crop soybean and soybean meal demand. Corn export sales were up week over week, but we're coming from a very low week and the lowest week of the marketing year the week before. Managed money traders sold off net futures and options positions of wheat while adding positions of corn and soybeans in those managed money accounts. Late last week, we found out that Indonesia, the largest trader of vegetable oils to the world, was going to lift their ban on palm oil exports, and that provided some support to the global food security, but caused a little weakness in our soybean oil complex, and that's why we saw soybean oil down. And then last week, India, as we have talked about previously, has put a ban on wheat, but traders are starting to come to realize that's maybe potentially a soft ban, and so we saw more optimism on wheat flowing out of India and places in Russia, helping to supply some of that wheat market. And then just yesterday on Monday, we got this week's crop progress report. It showed 72% of the U.S. corn crop planted. That was another big week, and we're basically back to normal in terms of U.S. corn corn planting. That was up from 49% the week before, but versus 80% last year. As with a gain of 23% week over week, that's a 50% gain over the last 2 weeks. And then winter wheat ratings remain weak, but saw a little increase. Again, I think it's some of those poor quality wheat acres getting abandoned. We'd expect that, and it's causing the wheat ratings to go up, but it's still very weak.
So it sounds like if 2 weeks ago was a little bit gloom and doom for the market and its outlook, last week might have been a little bit of a light at the end of the tunnel.
It definitely turned the picture on the demand story for sure. Saw some solid export inspections for corn, saw some solid export inspections for soybeans, and then certainly holding steady there on the corn or the ethanol production. So yes, a better week demand-wise for ag commodities.
So looking at today's key topic, we're going to go to something that obviously a big discussion point for the last year and a half plus now, but it's shipping supply and the supply chain overall. But looking at the situation right now, what we're seeing is containers, maybe once they get to ports in China, which China's having a lot of issues bringing in these products. Once they get there, the containers are sitting around for 10 days plus up to 2 weeks. So how is that really impacting ag supplies and the movement of exports?
It's impacting us in a major way, especially for products that are shipped via containers. And the story has just continued, as you mentioned. I mean, it's just gone from one thing to the other. I think the thing that's facing us right now is we seem to have worked down some of our backlog that we were seeing at ports here in the United States. Things are in a much better situation today than they were 4 months ago, 5 months ago, at least here in the United States. However, looking overseas at China, they're still fighting COVID. And they remain a zero tolerance policy to COVID. That's been a notable difference from other countries around the world, where they go into lockdown if certain portions or a high enough proportion of a population is confirmed with the COVID virus. And that's one of the challenges that they've been facing. But given how big of a market, both imports and exports, China is to the global economy, it's causing these holdups. Just this week, we saw the numbers for Beijing supersede the numbers for Shanghai in terms of COVID cases. Well, that's good because Shanghai is obviously a big port, and we've been watching it and seeing some of these backlogs there. So, that could be that things in Shanghai are starting to ease up. But unfortunately, it's that the outbreaks in Beijing are just drastically increasing. So we're seeing these backups because they're not able to get people to the ports to offload or reload ships, and that's just causing a pause in the system. So it's something that we continue to deal with. I sound like a broken record, but it's one of those things that, especially for products going out of containers or going through containers, the issue is still there, just in a different part of the world.
So a lot of what we've been discussing and looking at it through maybe a U.S. export lens. So we've talked in past weeks how sales look pretty decent. They're okay, but export inspections have been really lagging and not being able to match where we'd like to see. So really, to get that to where you'd like or feel more comfortable, do we have to first see a change in how China is handling maybe their COVID policy before these shipping lanes are really kind of cleared back up?
So this is a good question. And yes, the short answer is yes. There's people within our industry, and I always think it's important to get a broad perspective or get a number of opinions as it relates to markets. That's how we become smart, or that's how the markets become smart, is by having a collection of thoughts. There's some people that believe that China will still come in and buy more corn to build up their stocks as we move our way through the marketing year, especially if there's shortfall here in the United States. Right now, there's, of the countries that are waiting to take shipment on U.S. corn, about 33% of what's left to be shipped, or 565 million bushels, is destined for China. Mexico has about a commitment of 25% of our outstanding sales, or 154 million bushels. So even if we didn't make additional sales, we still have substantial product left to ship. And I think that was your point, is to get these shipments out of the United States into these countries, especially China, what's it going to take? And yes, it's going to take clearing up some of this backlog. And even though corn doesn't necessarily ship via container, the backlog and the pause at the port certainly is causing challenges offloading raw goods like corn, right? If you've got a container full of perishable produce, you're going to pull people off of the corn ships to offload those containers. And so we're going to have to do that. Now, we saw some nice shipments to China this week. If you look at our shipments and the export inspections, China represented the largest. They represented the largest destination for U.S. corn last week, and soybeans. So we are shipping product. It's going to take some more to be able to continue to get what's committed out of the country.
So I want to go back to something that you said that was really more of a positive. I don't want to always be gloom and doom when we're talking about trade and exports here. Talking about locally in the United States, we've seen a lot of these ports, a lot of their backlogs and issues clear up. Looking at Savannah and Charleston, key ports like that. So what's been the real cause behind that and reasoning?
Yeah, and Oakland and Long Beach, right on the West Coast, all of them have had some some level of support. This has come, each one's different. I can't make a blanket statement that's going to come out and say, yes, this fixed the issue for everything. We still have large amounts of demand of international products coming into the United States. People continue to buy products. It's maybe not as heated as what it once was. And so, that's providing some support, or at least not being as big of an issue as it was before. But we've also had enough time to kind of work out how to store crates, moving them out of the port to maybe a field a couple of 50 miles away, 60 miles away, something like that, and holding them there. We had time to get those secure spots lined up, so we just didn't have empty products sitting in a field, or having products sit in an empty field. But so we got some infrastructure in place, and that's been a big help. Certainly, we alleviated some of the pressure by making some changes to the trucker standing, increasing the labor pool to work with. So there was a lot of factors that went into this, and each port is different in terms of what they were able to do to help relieve some of the pressure. Now, I don't want to say this is all said and done, like everything is cleared up, but just from the time being, the United States is not the world's black sore in terms of moving product. We've been able to make some adjustments that have helped us out. So,
well, in watching the market during this time, it seems like we've gotten into a mode of maybe overreaction and then correction every time there's some sort of major market driver that comes out. So you talked in your highlights about Indonesia bringing back some of their export flexibility, and then India, when it was initially on the ban, maybe the market reacted strongly to that, but then as they realized it was a soft ban, reactions kind of backed off. So are you seeing some of the same things? Would you agree with that we're seeing maybe overreaction and then correction in the market?
Yeah, we always do, right? So you see the biggest swings when the announcements are made, just like COVID back in 2020. Just like some of the supply chain issues that we had earlier in 2022, the biggest market swings are always going to be at the biggest, and then as we kind of learn and manage it, right? I don't want to say that the signals or the noise becomes muted, but it does, right? We don't have as big of swings, and I think that same concept can be applied to the Indonesia palm oil ban. And then also the export ban on India wheat, right? The reaction is always maybe the worst case scenario, but then as things kind of start to work its way out, you see the markets kind of tamper. Probably a reverse of that. I don't want to say that that's always the case, but a reverse of that would maybe be the weather premium that was building up in the corn market over the last couple of weeks. So there for a while, we were starting to sweat, and you started to see this progression of people saying, hey, we're not going to get the corn planted, or it's going to be planted late. We're going to have all these yield shortfalls, which that's still there. North and South Dakota and Minnesota are going to have troubles planting the corn crop, and there's going to be subsidizable corn prevent plant in that region. But for a while, we thought the entire Midwest, Illinois and Iowa, was going to have trouble planting corn, and Missouri. And those states have caught back up. And so that was a case where the story started, and it took a while for the market to start adjusting to it. And now we've kind of adjusted out of that as well. So again, it has different ways, but certainly for these big ticket items, the market is always most volatile at the beginning.
Well, it was really interesting watching the USDA through NASS, their crop progress report week by week, because planting progress, like you said, is very far behind. But then in 1 week, we saw Illinois, for instance, plant more than 40% of their corn crop. And then the next week, they were, ahead of the average. Now, emergence is still well behind. So will that also add some impact for a little while into the market? Or are you seeing those pressures really be relieved?
So I think right now what the market's adjusting to is the fact that we could see less corn acres, and that some of these corn acres in North and South and Minnesota, South Dakota and Minnesota are going to move out of corn into maybe a different crop because they can't get planted. So I do think that is the driving force within the corn market, not so much on the emergence side. I do want to, it is amazing, and I in terms of how fast we can plant the crop here in the United States, and certainly we're not out of the woods. But certainly, if you talk to climatologists, they tell you that this is a year like what we're likely going to see going forward. Is these very narrow windows of being able to get in and plant a crop, and that's a management consideration. We need to be thinking about that. How do we prepare ourselves to when the timing is right, whether it's the middle or end of May, or whether it's the beginning of or the middle of April? Being prepared for these windows to hit them, because it certainly sounds like we're going to have fewer and fewer of them and smaller windows, especially in the spring planting season. And we just never got these windows in 2019. Like, they just never showed up until it became June, end of June. So.
All right. Well, Ben, I always appreciate your insights. For the rest of the week, reports to keep an eye on Wednesday, we have the ethanol report, then Thursday, export sales. I would like to mention for the holiday weekend that markets will be closed on Monday, so keep an eye out for that. Anyone on the cattle side, if you have interest, please check out the weekly livestock market update with Brownfield's Megan Grebner and the University of Missouri's Scott Brown. As always, I appreciate you joining us today, and have a good rest of your day. I'm Will Robinson on Brownfield.